Good night everyone and welcome to another Elliott Wave Forecast technical video a day. Today is Tuesday, October 16 around 10:52 p.m. Eastern Standard Time. Guys, what a day we have today. I mean, the dollar, it was sold. Last night we mentioned the idea that the dollar, it was a sell and that the area around the 79.35 in the dollar should hold if the dollar has any type of bullishness. In our opinion, the idea that the US dollar here, and this is very important because many of you guys can get confused with the euro. I mean, this idea right here that the dollar makes a marginal new high about this level makes the case the same that happens right here. Now, what happened is that, and I want to repeat this, I have been mentioning it all over the days, that if you take a look at the euro, yeah, and the euro doesn't matter. It's a three-way pullback. Technically, it is ABC if you want to look at it, but that's not the case in the dollar. In the dollar, technically, this structure from the lows is an ABC, and I mean that can make the case that the cycle ended right here. Now, that anything can happen in this market, absolutely, but I want you guys also to remain. It's not smart to fade this move against the trend. I mean, I would say to you guys what I told everyone today. If you're going to be a short euro, you better wait for this level to get invalidated. In other words, I mean, wait for our system to call the bearishness of the euro. Because otherwise, guys, you can burn out. For me, particularly, I mean, I had seen 44 charts right now, and I tell you the truth, the chances that the euro is gonna get into a double zigzag are minimum. I mean, it hasn't been invalidated, but like we always say, you gotta label with the trend, guys. You gotta go with the trend. And honestly, this is a move in favor of the trend. I understand that in the case of the euro, it looks like ABC. Exactly, always gonna be like that. When you got a bias against the trend, you're always gonna go with the double zigzag. You're always gonna go with a flat. In our case, we're gonna go with the most bullish scenario in the euro, the most bearish in the dollar. We have enough data to understand that this low is gonna give out in the dollar, and that this high is gonna give out in the euro. So, with that in mind, honestly, guys, this is what we believe. We believe that the dollar is going to start selling, and it can be selling hard. And we believe that the euro is going to start buying, and it's going to buy hard. Now, the structure, it has been defined yet. In the case of the euro right here, it can be a bullish triangle. We don't like it. We don't like the bullish triangle, honestly, to be honest with you. But, like I say, it's very easy, guys. Trading is all about levels, and now the level in the case of the euro is right here. You gotta be bullish against 128.88, right? Technically 138, 128.50 area. The case of the dollar, you gotta be bearish against this level. It's all about levels, all right? So if I can add to this chart two pairs, I want you guys to look at it. I mean, without bias, I want you guys to look at it. Look, I want to ask you guys here the dollar Swiss and the Norwegian crown, two US dollar pairs. And you guys are going to be able to see where we're coming from. Alright, let me ask you guys here the dollar Swiss and the crown, and you guys are gonna see something. Both of those two pairs, they already broke the lows on the same day, which is September 14th. So what are you gonna call it there? A flat? No, you never call it flat until you have evidence that the flat happened. You never do that. So look, those two pairs, the crown and the Swiss, both of them, they already took the lows. So guys, I mean, the chances are that the dollar is, and the renewal of the trend is a 99% against 1% to be a flat. I mean, I understand that if somebody hold the buyers, they're gonna be looking for the flat right there. We don't. We go with the more aggressive count, and the more aggressive count in favor of the dollar is this one. Look, the dollar he cannot break this level. It did it already. So for me, the dollar is in an impulse to the downside when it goes like this. 1, 2, 3, 4, and it's going to continue to go lower in a series of 4 or 5. Even if you're going to call the dollar in the flat, look, this is it. This is your B way. And then you got to go 1, 2, 3, and you need an impulse to the downside. This has the chance to be the move that we were expecting, guys. And like I say early today, I want you guys to understand that the structure is repeating himself. We advise every one of you guys to watch the video that we see on the dollar today, that we did on the dollar. A very interesting video in my opinion. And the history is repeating right here. And then the dollar can be breaking lower and lower and lower. And when you don't realize, the dollar is at 76. So my advice to you guys is any 3 ways back, sell the dollar, all right? Now, short time friends, like I say, it looks like this is a 5 right here, and this is another 5. So being a 5 and a 5 and being extension here, we believe that the dollar right now is in an intermediate, internal wave 4 that should hold resistance. It should hold resistance around 79.25, even 79.36, which is 130, 70, 130, 40 in the euro, and from there the rally should continue to the downside. Now, talking about the indices, we cannot change, and we've been mentioning this to you guys before, that the day that the dollar, that the S&P looks like ended the correction, we're gonna change the count if it didn't reach lower. Right here, the S&P leave us waiting for the 50 back, and right here it looks like it's gonna do the same. So for now, the imports in the S&P 1, 2, 1, 2, 3, 4, 3, 4, and then with this count, what's gonna happen is that would allow us to extend the cycle from June the 4th. Consequently, the new high between 1486, 1505 should end the cycle from June the 4th, and a deepest correction should take place. All right, that's for the S&P. Now, the S&P in the 1 hour, look, this is very important, and we are expecting higher price. I won't call at this stage a double zigzag. This is a 3-way move. It's being proved in the RSI that is a 3-way move, and consequently we're expecting outside in the S&P. If we take, for being a big way, it's too short in time for being a big way. So 13, it looks like the S&P is gonna break honestly to the outside. Now let's go to some individual pairs. On the individual pair, let's start with the SWIX. The SWIX, it was the first one, and second one, but the first one was the Norwegian krone that took the September 14 low. The SWIX, let me explain to you guys that the 1 hour structure or the 4 hour structure from the technical high, which is right here, it is not clear. Now, due to the fact that the dollar, the SWIX, and the euro, they run together, and due to the fact that the dollar did a marginal new high right here, and then the euro, neither the euro or the SWIX did it, and the structure is corrected from the high, we feel comfortable to say that most likely the dollar is gonna do in the first leg a type of flat. We don't like the triangle due to the fact that the dollar invalidates the triangle. like in some degrees, I mean, the dollar did right here, but it can be the triangle, and then if it's the triangle, it's ending the first leg from the trough, and it's the B, a C, and on to the downside. So technically speaking, I mean, we say that it can be a flat, 1, 2, 3, 1, 2, 3, and then this can be 5 ways, 3 backs, 1, 5, 3, and consequently, it's gonna do this type of structure in the first leg, a flat, and then the dollar, it can do this. An alternative if the triangle. But I mean, if you look at the dollar is denying the triangle. So the flat goes where? With the dollar, with the euro, and with the Swiss. That's why we're going with the flat in a structure from the real high that happened right here. So 3, 3, and we need 5 waves coming down here, when right now today we finish wave 3 of wave 3, and later it's gonna do a finish 3, 4, and 5, most likely doing a flat to the downside as a first leg. In other words, that this W right here was an AVZ, right here is gonna be a flat. There is nothing wrong with that. That's an Elliott Wave structure, and the market can take those paths. The same can be said about the euro. Look, the euro didn't make a new low right here, the dollar did. Consequently, because of that and the RSI, I don't like the idea of a triangle. So I would go with this, A, B, Z, A, B, and then from here, 1, 2, 1, 2, wave 3 of 3 taking place. It's gonna do something very similar to this. Alright, that's what we like about the euro. Now, this is the euro yen. Look, the euro yen, it hasn't taken the high yet, very close. So the euro yen can make another a 4 and a 5 to test the highs and a pullback, because if you take a look at the euro, after this wave right here, it's gonna be a pullback before continuing to go higher. An alternative is that the euro is gonna do ABZ, and around the 131.70 is gonna do a deeper pullback. We don't know yet, guys, the structure that the market is gonna take. We're just guessing, but we know one thing, that the trend is to the outside, and we gotta play with it and to prove it wrong, the structure. But it's bullish, and like I say, the euro is bullish as far as 28 is in place, guys. 28.88 should be very interesting for if it's invalidated to the downside. Now, talking about the euro in the 1 hour, this is what I mean. Look, let's wait for the data there. This is what I mean. From this low is what matters now. This is corrective. This is corrective, almost an 100% retracement. I gotta play the flat. I say here that also can be a bullish triangle. Anyway, I do believe that from here we got 1, 2, 3, 4, and we're gonna continue higher. We base that in the idea that the stochastic RSI, look, in the 1 hour, that's what we're showing me. Look, 1, 2, the 3, but this 3 is, and then you see the divergency, but it's at the lows. That's telling me that the downside is gonna be limited. Consequently, I believe that from 130.78, 130.49, the euro is a good buy against 129, against 130. The euro is a good buy for a continuation to the outside, to be honest with you guys. Alright, but we're calling a flat. 3, 3, and 5. That's what we like. Now, it needs to be seen if after we get here, the euro makes a 4 and a 5. When we get here, the euro can make also a deeper pullback, and then this becomes W. Remember, the structure do not need to be any pores. Now, another thing that I want to show you guys is the New Zealand dollar. It looks like the correction ended, And I want to show you the candles, because the candles give you a better idea about what we're talking about. Look, it looks like ended. Not only that, if we use the RSI technique and we go to the 4-hour, you guys gonna see that for the first time if you trace a trend line, send these highs here, look, it's trading already about the trend line there. You see, it's kind of trading about the trend line technically. So the high that we have in this candle is 52.31. The higher read in this candle was 54. I mean, it hasn't technically, it's testing to breaking the sequence of the 4-hour. It hasn't yet. That is pretty close, but it's looking good. Also, in the small time frame, we can make the case for New Zealand to doing an impulse. In other words, look, 1, 2, 3, 4, and a 5 with divergency. So it's looking good as a 5 wicks, and now the 50% back of this move, which comes around 81.44, is an excellent opportunity to go long this pair. All right, looking 85 to the outside. And finally, I want to mention the Norwegian krone, which is another pair that already invalidate the low. So technically, guys, we don't recommend buying the dollar. Otherwise, we recommend selling the dollar in a pullback. Every time that you see a pullback in the dollar, identify the levels of the pairs that you're trading and sell it. Remember, and there is a reason that we say on Sunday that the trend was, that the risk trade, it was almost ending. And that the correction was almost ending, and it can end it this week. Last, I want to mention something that I've been saying for the last 15 days. When I say that around October 17, the correction in the dollar should break higher. Exactly, that's what's taking place. Tomorrow is October 17. So let's see how it goes there, and that's our recommendation. Thank you, guys. See you guys tomorrow.